Nope. Got to get it up there. They're looking at us, not our bumper. There we go.
Ah! Oh my gosh. Listen, technical difficulties. Judah,
Can you imagine if we had a real show and just pretending that instead of just pretending that we had a show for our friends and followers?
Listen, hey, we get a little bit better every day. You take 2 steps forward, you take a half step back. You know
Right,
what I mean?
right,
Like, do the best
exactly.
you can.
This is great, my friend. This is how it's real people talking about real stuff. Hey, so listen, everybody. I'm really excited because Monday, Tuesday, and Wednesday we kind of pick a topic and talk about that topic and dissect it from a couple different angles or linearly go through that topic. On Thursday, we have a guest trying to talk about whatever that topic is, or sometimes the guest is a little bit off. And then on Friday, we do a news wrap up. Now, Monday, Tuesday, and Wednesday, we'll spend 3 to 5 minutes talking about the news if there's anything particularly hot. But Friday is kind of our news day where we don't talk about the news of the world and everything that's going on. We just talk about what's applicable to the real estate market.
That's right.
And what our commentary on that is.
Yep.
And boy, do we have some doozies today. So, Josh,
Before we jump in,
who are you? Who
I
are you? And tell us about Hard Money Bankers.
Well, I'm not even going there. Before we jump in, I want to talk about Eric Brewer. Eric Brewer, we had him on this show a couple weeks ago with a bunch of other experts. Eric is doing something in York County that I think is really, really admirable, and I want to help his cause as much as I possibly can. So Eric and his Integrity First Home Buyers, they're doing a fundraiser for the York County Food Bank.
Okay.
Eric has worked with them in the past, and he pointed out, you know what, I don't have the numbers in front of me, so I'm not gonna just make them up. But he was saying that it's something like 100 to 1. Like there's been a huge increase in demand for people
Right.
that are trying to come in and get food, right? So he and his company, they're trying to raise $10,000, and over the last 2 weeks, they've raised $6,400 for the cause. And so if you want to donate, if you want to be part of that, there's a link in the comments section. It's a Facebook page. It's a Facebook donation. You can go to I'm not going to read it off. It's a bunch of numbers, but it's in the comment section. In addition,
click the link.
For every house that he buys in the next 30 days, he's going to donate $100. And nice. Eric, as you know, he does a lot of volume, right? Yeah.
Yeah. I mean, that's probably, $1,000 to $2,000 right there just from Eric.
That's exactly right. And I'm sure that he's giving in addition to that, but I just wanted to mention him as we got the show started, because I think that's really, really important. There's a lot of controversy, and we're going to talk about this today. A lot of controversy going on right now. A clash of business versus the government and in a lot of local municipalities and stuff like that. But it's really good to see when you've got local business people that are stepping up, they're helping out in the community, and they're supporting the environment that they live in. And I think that's really cool.
Yeah, absolutely. And Eric is Eric is a great, genuine guy, and definitely putting his money where his mouth is. And I think that is pretty cool. So let's go. Man, am I like fuzzy today? Do I have to do that? Do I have a bad connection? I feel like I'm blurrier than normal.
Why don't you, Judah? Why don't you jump in? And I want to, we want to mention that in June, the end of June, we have the Real Estate Hackers Conference coming up.
Yeah, absolutely. So we're still over a month away from this. We're about 45 days out. We're slowly starting to open, and all indications look like we are going to be in great shape for this. We have a tremendous lineup of speakers. We have a tremendous amount of like after party things. Here's the deal. Like when I got started in real estate investing, one of my favorite things to do was meet up with people at the hotel bar at these events and just be like, hey, what are you doing in Nevada? Here's what I'm doing. What are you using this company for your mailers? Are you using that company? Oh, you're not, using mailers. You're doing, text message blasting. Tell me more about that. And so it's not just what the speakers are going to be doing. It's not just what you're going to be able to learn at our vendor showcase, which is going to be amazing. There's going to be just like a whole trade show full of booths and everything like that. But there's also going to be, we're going to purposefully be building in networking opportunities. And that in and of itself is worth the price of admission. And we're trying to break even on this whole thing. So,
I mean,
um,
on that note, I know a lot of people that buy into masterminds, they buy into courses, not for what they're going to learn there, but who they're going to meet. I mean,
right.
having basic knowledge and I mean, even in-depth knowledge is really important as an investor, but it's just as important who you know, who you network with, and the Real Estate Hackers Conference is.
You learn from other people who aren't necessarily trying to sell you a book, tape, or seminar.
That's right.
There's going to be other people there who you're going to be learning from, and I promise you, it's not going to cost you $10,000 to get in the door. So it's going to be a great opportunity. We've got the information right there on the screen. Real Estate Hackers conference.com. That's separate from the Real Estate Hackers website. That's realestatehackersconference.com, and it is June 26th through the 28th. We were having this earlier in the year. We had to push it back, and we are super happy that the hotel was able to have that time for us. Josh, what do you got for us today?
All right, so I want to start with what's going on and started about 6 minutes ago in Harrisburg.
No, don't start there. Tell us about Hard Money Bankers, because otherwise we're going to forget to tell about Hard Money Bankers.
All right, so look, I'll keep this short and to the point. Look, if you're looking to fund your next real estate project, Judah mentioned the vendors event. We're going to be at the vendors event at Real Estate Hackers Conference. But if you're looking to fund your next project, Hard Money Bankers is a great option. We are a direct lender, which means that we can underwrite a loan and give you an approval on that loan on the same day that you contact us. We can close within 24 hours. And you know what? These are real estate investment loans geared towards investors. We don't do primary residence, so don't call me to refinance your house. But if you're looking for a flip, or you need a bridge loan, or you're looking to do a short-term refinance, Hard Money Bankers is we're a great lender. You can reach me at 717-213-8488 or hardmoneybankers.com. All right, now let's get
What's going on
into
in Harrisburg.
Yeah. So today, maybe you're there, maybe you're just kind of looking into this, but there's a protest going on in Harrisburg with Reopen PA is protesting the shutdown that's happening in a lot of the counties and some of the things that have been going on. If you haven't watched the news, if your head's been under a rock, then so be it. But I mean,
there's great debate about whether we should stay open or closed, and PA is the only state that realtors cannot operate. And what that means is it's really hard to show properties. It's really hard to evict bad actors. I had somebody just yesterday reach out to me and say, "Hey, I got a guy who's been caught dealing drugs twice out of his apartment. Am I allowed to evict him or not?" And I said, "You know what? That's a great question. I don't know. I think the courts are still closed, so I don't even think you can evict for that." So yeah, I mean, there's a lot of reason why there's people that are in Harrisburg. Oh, that's right. You were there for the first. First protest. Now it's a little bit warmer. Do you think that they're going to get more people to show up this time?
I think there's a bunch of things going on. So since the last protest, a lot of things have changed. It's not been that long, probably a month ago, something like that. But a lot of things have changed. One of the most notable is in the last week, there were 2.98 million new jobless claims.
Right.
That is staggering. Yep. Right now we're at 36.5 million jobless claims across the country. You've got a lot more information coming out about the effects of this virus. And I don't want to downplay this. I'm looking at the stats to my right. There's 56,000 people, almost 57,000 people died since February of COVID-19. That's
total deaths are like over 85 or whatever they are. I mean, how many?
From CDC. This is from the CDC. It's 56,977 as of yesterday.
Right.
So, I mean, and we've got
that's worldwide deaths. Can somebody chime in here and tell me what am I thinking? What's the 85 number? Is that worldwide deaths or something? Well,
it's more than that. We're over 1 million worldwide deaths for sure.
Really?
This is no joke. It's a real illness. But I think people are looking at this and weighing out hey, look, is the medicine worse than the disease? I mean, I think one of the most staggering statistics. I'm sorry, I'm looking off here onto my other screen, but what's his name? Powell, is that the
Yep.
guy's name? Yeah,
Yep. Jeremy
Federal
Powell,
Reserve
he's the Fed,
Chairman.
he's the Fed chairman.
Oh my gosh, of people that had jobs in February, if you have a household income of less than $40,000, there's a 40% chance you lost your job in
Right.
March.
And
I mean,
household income, median household income is like, 60, 55, 60, something like that. So
$45,000.
what's that?
And annual household income average $45,000.
Oh, so you're
Yeah,
saying no. I'm talking about what median is, and so this is for people who have 45 or less. 40% of them have lost their job. So I mean, this is a tragic headline, but this is also a predictable headline, right? I
yeah,
mean, one of my favorite commentators says, meteor to hit United States, women and poor hurt the most.
right.
I mean, obviously, unfortunately, those who are economically insecure are going to be most economically impacted by an economic tragedy. I mean that just makes sense.
Yeah, sure, absolutely.
Sea levels rise 4 feet. New Jersey affected worse than PA. I mean, clearly, right?
New Jersey and California,
Right,
most affected,
exactly.
right? Yeah, yeah, it's true. It's true. So, what do you think? What do you think we see here? I mean, I think it's going to be interesting to see the effects of this protest. I mean, I think that we've got crazy people on both sides of the equation right now. And like I would probably put myself in both camps and jumping from side to side.
Well, I also think that what you're seeing right now is, listen, the joke has always been the reason that liberals protest more than conservatives is conservatives have jobs, right? That's why there's always so many more people show up to a liberal protest of any cause.
Sure.
A lot of conservatives are out of jobs right now, and they've got the freedom to show up at these protests. And so
Yeah.
I think that what we're also feeling is that the jobless numbers are in. There's more people filing for unemployment every week. You know what I mean? There's new jobless claims again in the 3 millions. When that number, when a reading of like, you know 40,000 used to be huge. You know what I mean? 40,000 weekly jobless claims was huge. Now we're at 3 million. So the 6 week average is that number of new claims has been going down, but it's still going up. You know what I mean? It's
That's right.
almost like your kid saying, "Hey, Dad, last week when I was washing the dishes, I broke 8 dishes. This week when I was washing the dishes, I only broke 3."
That's right.
Okay, you're getting better, but you're still breaking new dishes.
It's really crazy. And one thing that I didn't have on the agenda, but you brought up right before our call, is the impact that this joblessness is having on the deflation as opposed to inflation. And like
Right.
one of my bullet points here to talk about is this $3 trillion stimulus package that people are talking about. And I last Friday after our call, I was talking to an economist who randomly gave me a ring, and we were just talking about a bunch of things. And one thing that I asked him, I was like, "Look, man, we got all this money pumping into the economy, and it's like we're just printing money. What's this impact on inflation and like we're just creating it out of nowhere?" And his comment was, listen, we're the world fiat currency. We have an obligation to make sure there's liquidity in the markets, not just in the US but around the world. And it made a little bit of sense, but when you brought in the whole idea of deflation, it really
Yeah, so let's talk about what happened in 2008, right? In
yeah,
2008, there was Operation Twist, where the Fed was buying mortgage-backed securities, and they were buying treasury notes and things like that, and it was their way of printing money. And everyone said that was going to lead to inflation or hyperinflation. And as much of a deficit hawk and a monetary hawk as I am, I said no, probably not, because the market, not before the Fed even got around to it, or the legislative bodies even got around to it, the market had destroyed mortgage-backed securities and the tranches and why can't I think of the other one, like credit default swaps and other things like
Yeah.
that. They weren't destroyed, but they went from here to here, and there was all these derivatives, and those derivatives operated kind of as another currency in which businesses traded with other businesses. And so inflation is when a whole bunch of new currency comes into the marketplace, and therefore you have more dollars chasing the same amount of goods, so prices necessarily go up.
Right.
When you burn money, or just the market says we don't really want to do credit default swaps anymore, it pulls liquidity out of the market. And so you can actually, because you actually can print money, which would normally be seen as inflationary, and be doing that to fight deflation. Because here's what deflation is, and here's why deflation is deflation is so deadly that
Yeah.
the Fed doesn't have a policy of balance between deflation and inflation. Their
Yep.
policy is a 2% annual inflation, because we want to stay as far away from deflation as possible. Here's
Well,
what
it's funny.
deflation does. Let me give the
Yeah, yeah,
example.
yeah.
I'm right now looking at buying $200 to $300 worth. Let's say I'm looking at buying a $300 dresser for my son, right? The one he has is falling apart, and I got to get him a new dresser, and COVID's really standing in the way, and I doing online shopping. So if we're in a deflationary cycle,
Yep.
I'm going to sit on my money, because, hey, you know what? Instead of buying that $300 dresser this month, next month it might only be worth $275. And when people stop buying goods and stop investing, when you can, the way the economy should work is, if I want to turn my dollar into $2, I have to I have to risk it into business and put it to work for me, so that I get $2 back. In a deflationary cycle, you can put your money under the mattress, and depending on how hot the deflation is, your $1 will be worth $2 just by sitting and doing nothing. That's very, 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 very problematic, and hard to get out of. So consumer price index, Fed wants to see that going up by 2% annually. Producer price index is what leads, that's on the wholesale side, that's what leads to consumer price index. Right now, the last reading on both of those is deflationary, not inflationary. So I'm not saying we don't have to worry about inflation as well. I'm just telling you, when you hear a whole bunch of people out there saying inflation, inflation, inflation,
Right.
actually know that this is a more nuanced conversation than that. And the U.S. is not about to be Zambia or Zimbabwe or whatever it was, with $1 million bills floating around.
Well,
Sorry, that was a long soliloquy.
when FDR took us off the gold standard in the early
Right.
1930s, the whole reason for that was because we were in a deflationary income. There wasn't enough gold for the goods that were out there.
Right.
And there's an argument to be made there, but it's really confusing, because right now people aren't working. There's not money flowing into the economy. And so really there's no generation of wealth, or even generation of currency. And because of that, we're facing this deflationary
Right.
potential.
The
Right?
U.S. how the world economy has worked for the past 50 years has
Yep.
been, the U.S. has been a spender nation, and the other economies of the world, by and large, have been saver nations. And how they've
Yep.
saved their money is by putting it in their banks, and their banks have bought U.S. Treasury bills, or they've directly bought U.S. Treasury, bonds and bills and things like that. Because stores are closed, people are sitting at home and without really trying it. And also they're kind of worried about, am I going to lose my job or not? So they're like, maybe just being a little bit more frugal. The savings rate in the US has never been higher than what it's been. I mean, not never been higher, but you have to go back like 10 years to see an
Right.
equivalent savings rate of what we have right now. So there's a lot of, and it really frustrates me when there's so many people, conservatives and liberals, who are worried about inflation. And I got to tell you, I don't see inflation in the next 3 to 6 months being a problem. If we over worry about deflation, we might push ourselves into inflation. But right now, we actually need to try and be creating inflation.
Okay, so this is what I want to talk about next. This $3 trillion bailout it
Yep.
kind of goes hand in hand with some of the scandal and craziness that's happening across the country, right? So at the same time that we've got all of this COVID news and we've got this infighting, let's say, between business and government, we've got the government stepping up and saying, all right, we've got a $3 trillion bailout package. And a lot of people are screaming and yelling, saying, this is a government takeover and this and this. And I'll tell you, I'm one of those people to a certain extent. Like I really am, because you see a lot of a lot of things that are hidden in this bill. Like there are some really good parts of this bill that
Yeah,
I
but
think
that's always Washington. I mean, they always put their pet projects in there. They always add some pet, regulation that they change on this or that. I mean, it's not just pork that they slip into these bills. It's also like, oh, by the way, now there's a hidden tax on this, or there's a hidden new regulation on doing this, that, or the other thing. So
yeah. Well, so on that note, I think one of the issues that we have is that the undercurrent here is that we've got all these potential scandals and nobody really knows who to trust. And so what do they default to? They default to what they think and who they identify with most. And now, like this week, there was some really big scandalous news coming out of Washington. The first is that the chair of the Senate Intelligence Committee, Richard Burr,
right.
stepped down. He stepped down because apparently he sold a ton of stocks in the beginning or mid-February to the tune of like $1.7 million before all this COVID news came out on inside.
Well, let's not say before all this COVID news came out, because I mean there was a lot of already news coming out of China that this was bad and awful, and certainly he was privy to intel reports, but there was already tons and tons of I think
Okay,
the travel ban was in effect at that point. Like I think that there was a lot
I'm not
of
even saying. Well, so here's the argument.
because they raided his house. They
Well,
raided a senior senator's house. I mean, like the FBI's got to be involved in that. The
yeah.
DOJ's got to be involved in that. Like it just, I mean, you listen, if some police officer has it in for Josh because you dated his girl in high school and he didn't think that was right, like Josh, you or I could be raided tomorrow and it wouldn't take that much. You've got to have an pretty airtight case to raid a senior senator, and the Republicans are in charge, and this guy is a Republican, so he's like the party in charge. That I
It,
think that they're. I mean, I can see both sides of it. It looks a
right.
whole lot worse than maybe it is, though.
Well, so this is what I think is interesting. I agree that maybe it looks worse than it is. The problem is that insider trading is not illegal if you're a member of Congress. That is true. It's outrageous, but it's true. It's the
I thought that
only
there was a law that was passed like in the '80s that said like you're not allowed to
there was a
use it.
there's a documentary on Netflix about this. Like
Really?
specifically about this. Yeah. And like all of these congressmen and senators, they do this stuff pretty regularly. But it's terrible. It's scandalous. It's wrong.
Dude,
And
speaking of scandals and documentaries that I just watched, you got to watch The Investor about that young chick who created that like $9 billion company. It was like a blood testing company and stuff like that. Like
oh
in
yeah.
2000, and then like it all blew. Like not Thanos. That's the guy
Yeah.
from
Theranos,
Theranos.
something.
Yeah, exactly. I always get that confused with the bad guy from the Marvel universe. So
Maybe there's something to be said. The names are so similar, right? Um,
what
well,
what's this one on insider trading and Congress?
I don't know. I mean, look, I've been watching
I'll
some,
look it up and watch it on Netflix.
but it's outrageous. That's all it is. It's outrageous. All right. So next scandal.
Yeah, it's almost like government can abuse its power, and it wouldn't be great if government was smaller and therefore not able to hurt us as much as they are.
Oh, get out of here, right? So now we have RussiaGate back in
Right.
the news, and I mean, there's so much. It's crazy to me to hear both sides of
Listen,
it.
the party that I want to be wrong is wrong on this, obviously, but I'm even sick and tired of this.
what I'm saying. And honestly, you look at the scandal and the conflict and everybody that's involved. I think we ought to just round up everybody in government and throw them all in jail. Like, let's start from scratch.
As long as we do it, as long as we do it with the bureaucrats too. See, everyone always gets mad. Like, I've been anti deep state since long before it was popular. You know what I mean? I've been anti bureaucrat for way more than just the past 3 years, because the problem is it's not the people we elect or the political appointees. The problem is the people who are there for, and it's not even a conservative Republican thing or a Democrat liberal thing or whatever. It's you know people at the FBI think the FBI is the best, and they don't work with the CIA. The people at the CIA have problems with the Department of the Interior. The people at the Department of the Interior have problems with the Department of Agriculture and Land Management, and it's just a giant mess.
Well, I thought it was really
So
interesting.
if we're gonna throw out everybody in government, let's like literally give pink slips to them all and start hiring again.
Well, I read something recently where there's like 23 different organizations that are responsible for information gathering, and like secret
That's why
information.
he's the Central Intelligence Agency. That's why I hated it when we came up with the Director of National Intelligence.
Right.
I was like, no, we already have that. It's called the CIA. They were
Right.
supposed to be the ones that were in charge of this, and the Director of CIA was supposed to be the Director of National Intelligence.
Yep.
Creating something, we're creating a crown to sit on top of the crown. Like, that's what happens with.
Yeah, whatever. All right, let's talk.
So here's what I just wanted to say about this. You know, when I was a lender, I was not a mortgage broker. I
Mhm.
actually had my own warehouse lines of credit. I lent money and then sold it on the secondary market out the back street. I had the comptroller of the currency. I had the Fed, and I had the U.S. banking department, as well as state agencies as well. But I had three national agencies and then a basket full of state agencies, all looking over my books. Like, I didn't know how to commit fraud if I wanted to and get away with it. You know what I mean? Like, I had to
Sure.
submit audited financials, not just like they wanted to review my financials or a financial statement or send them my tax returns for my
Yeah.
personal and business. I had to send them audited financials. I had to pay a CPA $5,000 to $15,000 a year and basically say rebalance my business checkbook for me. And that's called audited financial statements, and that's what I had to submit. So like, I people who like I have a friend who's a photographer, and
Yep.
he's like, oh, a little bit of government oversight isn't a problem. I'm like, dude, you have no idea how much of a pain government oversight is.
All right, let's talk
All
about
right.
how. Let's get off government. People are we're running up 30 minutes.
I promised myself not to go down this anti-government road and try and be diplomatic and objective, and you wind me up, Josh.
I know. Look, this is the most important part of the show. We're not going to push this if we go a little long today. Sorry, guys. There's a lot to cover. Let's talk housing.
Yep.
So, mortgage applications are up 11% this week over last week. That's a good
For
thing.
refis or purchases?
Everything.
It's the national mortgage. Usually they break that down, but so if it's total up by 11, I'd be interested in.
I would venture to guess that it's not on refis, it's on new purchases. And I want to say that because interest rates in the last week have gone up about a full point to a point and a half, depending on who you talk to, because of the overlays. I mean, I had somebody that was they were quoted 2.7%, and within the last week it went up to 3.9.
Yeah, I said overlays are going to be a problem.
Yep. A month ago.
Rush Limbaugh has that segment that he does. See, I told you so. And if overlays are what everybody needs to worry about.
Yeah. So that's number one. Like new mortgage applications, that's a good thing. Who the heck knows what's going to happen next with home values? Because there is conflicting news on so many fronts. I mean, on the first one side, we've got not enough houses, right? Like, there's not enough inventory. Everybody's pulled their houses off the market. And even the people that are searching and need to buy, there's no inventory for them to buy.
Right.
And that's been true since February. It's been true for the last year.
That's been true since February of 2017. Like, I mean, we've been in a we've been in an inventory crunch for a long time.
Well, and what do you think is the cause of that? I mean, because I think like we've had a slowly increasing housing market since about what 2011 or 12, and I think a lot of investment started in around 2015. You think a lot of the junker houses are gone, and so you don't have as many rehabs, you don't have as many opportunities there?
Yeah, I mean, I think that one of the other things is that the economy is growing, but it's not. In the early 2000s, the economy was just going gangbusters,
Yeah.
and I think that what happened was the equivalent of the millennials then were going into the housing market, and so there was a lot of properties being built and people were moving up a lot. I think that the reason that the housing market is slow right now and there's not new or slower than we would expect is because people are content with their homes.
Yeah.
So if people are content with their homes, they're not looking to move up, and so therefore, But I will tell you this: hey, dude, you got a little. I didn't know that, Josh. I didn't know that we were allowed to intern with you, buddy. Can I come over there and intern with you? But I think that we're going to see a lot more supply come on the market, over the next several years because we're going to see the baby boomers looking to retire and move into nursing homes. There's a lot of nursing homes that have recently had some beds open up. And sorry, that was a gallows humor joke. Please don't hate me. So, and then, and I think that we are going to see more and more, instead of apartment units built and luxury condos and things like that. I think that what we're seeing now is, remember, like last time there was a whole bunch of condos built in Florida. And I don't think that model worked. It's why
all over the country. All over the country.
Yeah. All over the country. But in Florida,
oh yeah.
So we talk about absorption rate and months of supply. In Florida, the condo months of supply was 36 months. Meaning if no more condos came on the market, it would take 3 years to absorb. Like, it was brutal. There was so much speculation. So I think that what we're seeing now is this news that you have here. I'm so glad you saw this too and picked up on it. This is big doings that Chase is looking to, or JP Morgan, right? JP Morgan Chase.
Yeah, it's JP Morgan Asset Management, but it's
are looking to build a whole bunch of single family homes that are just intended for rental. It'll be interesting to see how they deed them. Are they going to deed them separately, or are they going to deed them together so that they can be ended up broken up later?
Absolutely. So they're partnering with American Homes for Rent.
Okay.
In doing some research on this blew my mind. All right, so American Homes for Rent is one of the companies that during the Great Recession, just 2008 slowdown, they started going around the country and buying up single family homes one at a time, through wholesalers, through, direct to the seller, stuff like that. And they have 50,000, more than 53,000 single family homes across the country. Now, put that in perspective.
Are you
53,000, and they're not the biggest. They're not even close to the biggest. And like these guys, they're buying. I was talking to a friend of mine earlier this week who was telling me about another company, and I, off the top of my head, I can't remember. They have all over 80,000 units, all single family homes all across the country. And their average transaction is the sale of about 3,000 units at a time. So they're buying and selling average. So, I mean, you know what goes into underwriting a purchase or a sale or whatever. If you're buying that many homes, how do you, I don't know. I'm at a loss. Like I'm great on the single family home market on a one-off basis, but I mean, I don't know how you do that.
The title for 3,000 and prepares individual 3,000 deeds and make sure that there's no error with it. And
you're talking about major infrastructure just to be able to do that, and it's pretty impressive. I mean,
right.
You got to have some sharp cookies. But anyway, American Homes for Rent is partnering with JP Morgan Chase. and they are yeah, they're building a bunch of homes. Steve Carney just chimed in here. Not sure if millennials are interested in baby boomer
Yeah,
homes.
baby boomer homes are definitely getting looking dated. You know what I mean? The windows are definitely different, and the floor layout, the hallways are smaller, and I completely agree with Steve's assessment here.
Yeah. Yeah. I mean, that's a good point. And you know what? A lot of times, these neighborhoods, they go through cycles, right? When they're new, you got younger families moving in with kids, the kids grow up, the houses start getting dated. And that's an opportunity for investors to jump in there and, kind of pick up the pieces. But I don't know. I don't know. I like rebuilding neighborhoods and like they're these projects are in the west and the southwest, and I thought commentary on this was pretty interesting. They were saying that a lot of people are probably getting scared away from a lot of these rural areas that we're in right now because of the spread of COVID, because of all the other stuff,
You
and
mean
they're
urban areas, not rural areas?
thank you. Yeah, urban areas. They're looking for less densely populated areas. And you know what? Massachusetts and Connecticut are also seeing a boom in housing sales for the same reason. You have people in New York and some of these more densely populated areas. They're like, look, we want to get out of here. We want, this is something maybe we planned in a couple years, but with COVID, it's kind of it's created a little economic boom there in the sale of housing. And in those areas, housing prices are going up significantly
That's it.
up.
That's interesting. It's interesting that people would want to. Yeah, Manhattan must really have people on top of people if they think that moving to Connecticut or Massachusetts is a less densely populated area.
Have you ever been to Manhattan? Like,
Yeah,
I
oh
would
yeah.
be
I mean, absolutely. So, dude, I got a buddy of mine. Here's a funny story for him. Good buddy of mine taught me so much of what I know about relationship selling and everything like that. Came to get a job at FM 97, and you know his directions. This was like back before GPS and stuff like that. Was drive, blah 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 blah, and then when you see, when you get into the city, look for Orange Street and do this. He was from New York, so drove straight through Lancaster
Yep.
City, not realizing he was in the city. Got to Willis Street and realized I must have passed this thing. I better turn around.
Yeah, I get it. Steve Carney keeps commenting here, and I love the insight. I'm going to circle this back. He said, inventory remains low, and a lot of buy and hold investors are building versus rehabbing. I definitely see that. The one issue that you have though with building, Steve, is that like the costs are prohibitive. I mean, maybe the cost of building is going to go down, but the cheapest I've seen for new construction is about $100 a square foot.
Well,
And
you also have to really know what you're doing.
yeah,
I've never broken ground on anything, and I've been doing this for 20 years, and I have thousands of transactions under my belt. You know what I mean? Like the thought of developing just is not at all interesting to me.
yep,
So there's product out there to buy, rehab, and go from there.
yeah. So I'm
Yeah,
gonna bring.
Steve, it's a book.
But yeah, exactly. So we published a book in January on there we go, the Property Hackers book, Your Guide to Becoming a Successful Real Estate Investor. We're giving this away for the rest of the month to the best comment on each show. So Steve, DM me if you don't mind, or I'll shoot you a message. I got to get your information. I'll shoot you I'll send you a book here over the weekend. But thanks for commenting in there. I want to circle back to inventory, and I want to give some predictions here on what's coming up. The National Association of Realtors. I don't know if I read this on Monday or Tuesday, but they were saying, look, we're adjusting our predictions, and now we think that there's going to be a slight adjustment. We'll probably see a 4% reduction in in price points. Now, 4%, if it's only 4%, we're
Hallelujah.
like gold raining down from heaven.
God bless America.
That will be, it will be amazing. I think we're going to be closer to 20 or 25%, depending on the market you're in. And maybe I'm being pessimistic, but I mean, on the lower end properties, we already have huge amounts of unemployment. We already have, much tougher restrictions on lending. So lower end housing, your first time home buyer is gone. They don't exist now.
Right.
So the only people who are going to be buying are investors. And if you're buying in a C grade area, what's that property going to be worth? What are you going to put into it? On the flip side, on the high end, you've got jumbo loans that don't exist anymore.
Right.
And you've got a lot more restrictions, on buyers and credit. And even if you are well qualified, your rates are going to be higher, significantly higher than that median home price. So I think median home price neighborhoods, there's still demand there. People still need to move. And if the people that have pulled their houses off the market don't flood the market over the summer, and demand still is, outpaces the supply, we may be looking at that 4%. That would be great. That would be wonderful.
Yeah. I mean, I also, yeah. We got more commentary there because I think that we're going to see jumbo come back pretty quickly. I know that there's a lot of jumbo loans that are on hold right now, but I think that once we open back up, there's not a liquidity problem in the secondary market, and so I think that we're going to see some more jumbo loans.
That's awesome. Last but not least, landlords. I think the takeaway of the day is, man, if you want to be a landlord, now is the time. I mean, this is, yeah.
Absolutely. And because there's going to be a lot of people out there who want to sell their houses and aren't going to be able to. Now is going to be an awesome time for subject to. Now is going to be an amazing time for subject to. Actually, I should write an article about that and teach people how to do subject to and get that posted on Bigger Pockets. And yeah, I'm really excited for us as a property management company as well. We at Slate House Group manage about 4,000 units right now across 4 states. I think that there's going to be a lot of don't wanters in the marketplace right now, and they're not going to be able to sell or not want to sell, or they've realized how people's memory is fresh enough to realize how quick we came back. We came back from 2008 and 9, and so there's a lot of people who are owners who are saying, "Geez, there's a dip in pricing here, but I don't want to sell it and pay the stupid tax, so I'm going to hold on to this." And I think that just like no one changes their own oil or changes their own brakes anymore, fewer and fewer people are managing their own rentals.
Yeah.
And so it's a great time to be in the property management business. And I think we're going to continue to pick up a lot of units.
And if you've ever rented your own properties or managed your own properties,
it's the worst.
It's it is. It's so much easier to do it as a manager. So, right now, after the 2008, there was a little bit of a lag. And then all of a sudden, I saw rental rates jump like 25%. And it happened overnight almost. It was like all around the country. I mean, many of the properties that I was managing at the time were in like that C plus B minus neighborhood. And there was a little bit of a lag. Everybody's talking about, rent rates going up. And then all of a sudden, our average rent went from 800 to 1,200. It was like, boom, overnight. It was great. And I think, you can't beat that. You can't.
No, there's a lot of people who have dinged the credit during this coronavirus who have taken themselves out of the home buyer pool, and we're going to see a lot of people who are forced to rent for the foreseeable future.
Did you see this article yesterday? Anna Kelly turned me on to it. Right? It was on Yahoo Finance.
I read most of what she puts out there. Anna Kelly is an amazingly wealth of knowledge woman.
So one of the unintended consequences of, hey, you don't have to pay your mortgage for 6 months or, go into forbearance, is that Fannie and Freddie specifically preclude you from refinancing or buying that mortgage for a year once you've been in forbearance. So people that just called to get information that were accidentally put into this pool now can't refinance at 2.5% or 3.5%, and they got a 6% mortgage, or not 6%, but whatever, even if they didn't miss a payment. I mean, there are people out there that never missed a payment, they called for information, accidentally got put into this pool, and now they're screwed. So yeah, there's a lot of up in the air. I mean, it goes to it, like pay your bills.
The same thing happens, by the way. Like if you just, I learned this. I know people have learned this lesson the hard way, and I've had people confirm this for me from the insurance companies. If
Yep.
you call the insurance company, you just call your insurance company. Hey,
Yep.
if I had a claim about XYZ123, boom, you're flagged. And not
Yep.
only are you flagged for that company, but like just like there's credit reports, like the insurance industry does all this back end reporting on what your total claims have been and everything like that. So yeah, you got to be careful sometimes what the actions you take.
That's exactly right. Dude, great show today.
Dude,
Everybody.
great show. 45 minutes, a little bit longer than normal, but we got into some really great stuff here. And why don't you close this out, Josh?
Yeah, absolutely. So next week we are going to jump into funding your deals, different sources, where to find them, where to raise capital. We're going to talk about, excuse me, private money, hard money, bank money, commercial loans, non-recourse loans, all that kind of stuff. We'll get into a lot of information. I am sure 100% that there is going to be some pretty amazing stuff. Hey, Tom Sirianni, what's cooking, man? Thanks for joining us. Sorry. Look, I am yeah, we're going to be talking about how to raise money and finance your deals as things go along here. Have a fantastic weekend. We got hot weather here. I can't wait to go out and soak in the sunshine.
Dude, I'm going to work in my backyard for the next hour or two. I'm going to be in my backyard, hoping that the Wi-Fi connects out there and working in the sun.
Yeah, it's beautiful. All right. Have a great weekend. Stay safe. We'll see you Monday.
See you, everybody.
Take care.